But even if you don't like retro movies, the business community clearly has a thing for retro executives. You know what? Almost a year ago now, we saw Howard Schultz come back as interim chairman of Starbucks after the departure of Kevin Johnson. Starbucks, as we tell Investing Club members, has a new CEO now, Laxman Narasimhan, and I think he's going to do a good job. I can't wait to spend some time with him. But Howard had to come back as interim CEO to get things the way it should be. Now, this retro CEO storyline has only become more germane of late. We've seen three separate companies, Disney, Stitch Fix, and World Wrestling Entertainment, be involved in just these kinds of reshufflings. Let's take them one by one, because these stories can tell us a lot about how you can create a comeback at a flailing business. We'll start with Disney, because I'm a longtime fan of this one, to the point where we still own it for the Charitable Trust, as you know from the top of the show. In late November, Disney ousted CEO Bob Chapek after less than 3 years in the job. They replaced him with his predecessor, Bob Iger, the guy who transformed the company into a true powerhouse during his original tenure from 2005 to 2020, but also made that terrible acquisition, Fox. Now, I got to say, the worst mistake Iger ever made, though, was picking Chapek as a successor. We gave this guy so many chances. Sure, Chapek was dealt a tough hand, given that he took over just as COVID exploded worldwide. But for his last 20 months as CEO, the stock lost 55% of its value. And that was a good deal of it was because of his mismanagement. Chapek used to run the parks division. He was very good at that. But his skill set clearly didn't translate to the media side of the business, and that did matter. Chapek never really managed to put together a compelling narrative to own the stock. When he took over, Disney Plus had just gotten going, and the stock quickly started trading like a streaming video play, which was terrific at the height of the pandemic. But, well, you know, it's been awful since the world went back to normal post-COVID. Even though Disney's theme parks were packed and posting great numbers, even though this company's got some of the best entertainment franchises in human history, at least in terms of earnings power, Chapek could never get investors to focus on the underlying value because he couldn't bring it out. Now, the straw that broke the camera's back was that last conference call. Holy cow! In early November, when Disney reported awful numbers, but Chapek made it sound like everything was, well, I was going to say fine, but really fantastic, I think is the right word. Close watchers of the show know I had high hopes for Chapek, but now I'm glad he's gone, and I'm glad they brought Iger in as replacement, because this is a Hollywood company, and he understands Hollywood better than anybody.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.